Hey y'all, my name is John Mitchell. I'm a certified financial coach. The purpose of this video and this YouTube channel is to teach you how to master the personal finance basics. In today's video, I'm going to be showing you how much dividend income my $43,000 portfolio made in the month of September. As we jump into this video, we need to remember why we're here in the first place. Through budgeting, I realized that cash flow is king. Through having enough cash flow, you can theoretically retire whenever you want, as long as you have the cash flow to do it. My average expenses year over year about $6,500, and I'm looking to bring in $10,000 of dividend income. All right, y'all, let's get started for today. Big changes to the portfolio. I'm really excited to share them, but first, a quick orientation for all you new folks out there. So this is my portfolio display. The purpose of this one is to display all the simple data I need to know about each stock to make a decision kind of going forward. The next sheet is our income sheet. In this sheet, I track each payout from each stock month per month, and then have it all totaled up and all, so I can get an idea of where we're going with that. Next, we get into this data sheet. So I take the average yields that you saw on the very first page and account value, get a average monthly dividend over 9 months, as you can see in the formula there, because we just completed 9 months of dividend payouts. I can estimate how much I'll receive in dividends for the year. And then this dividend growth rate is an assumption. It's not a guarantee. This comes from the book Get Rich with Dividends by Mark Lichtenfeld, which is the basis for this whole portfolio strategy. And in there, we're looking to have stocks that yield at least 4%. And we're looking for them to have at least a 10% growth of that dividend every single year. Let's jump into some of the changes I made in the portfolio. First, we added a new company. That first company is Allstate. It's the primary shares I. A very quick synopsis of them. My father-in-law has a newsletter he follows. I don't remember it off the top of my head, but I'll have to show it off at some point. They had this recommendation, so I looked into it and I realized, their yield is over 4%. As you can see here, their yield currently is 5.67% as of recording this today. And their dividend growth for the last few years, I think, is between the 8 and 10%. A fun fact about them, too, and this is new to me, so I'm still researching into it. But essentially, these shares, these primary shares, have a par value, almost like a bond. Their par value is $25 a share. So essentially, I bought these shares. My cost basis is $21.10. I bought them under par value. Also to note, so we sold Truist and we sold Amazon. Those are two new sell updates. For those who are wondering, no, I don't look to typically buy and sell dividend stocks specifically. So the reason why we sold, so Truist, Amazon, and then I had a third stock, NVIDIA, my trio. I bought all three of these during the April dip earlier this year with the tariff tantrums, as I think how they're going to be written down in history. But during the tariff stuff, when all the uncertainty was going on, stock values dropped for just about everybody. And for me, I always bet on America. So I know, okay, yeah, they're scared now, but I told you then people are scared, but the values are going to go back up. So that's when I poured some money in, the extra money I had, and I sold these companies because I wasn't going to keep them long term. Amazon was kind of an obvious sell. They don't have a dividend in the first place, so that's not going to play to this portfolio or this strategy that we're doing here. And then Truist specifically, their yield was actually phenomenal. It was great. I think it was over 5%, which is good. But they haven't grown their dividend in the last 3 years. And so to me, that screams, you're paying a great yield, which is cool, but if you're not going to grow your dividend, I don't want to stay around for the party. So I think I got 2 dividend payments out of them, which is cool. I made $20 in dividends from them, not to include the capital gains you see there, which I'll talk about in a sec. So yeah, that's why I sold them. Now moving on to capital gains, just to kind of bring you all up to speed on the close of those April buys, and maybe I'll do a full video on this later. But essentially, we sold Truist for a gain of $311. And then we sold Amazon for a gain of $462. NVIDIA, I can't remember. I think I sold that for $215 in gain or something like that. But fun fact, I made $1,000 for those 3 stocks just in capital gains. So that's $1,000 that I can supercharge my dividend portfolio with that I wouldn't have had I not done these trades. We're in current government shutdown as of this is October 5th when I'm filming this. So I updated the sheet in the second, but now we're filming on the 5th. So we're in a government shutdown right now. I'll be curious to see how long this goes. If it goes for a long time, you bet I'm going to be watching the market to see what kind of gains we can make there. Either way, for taxable brokerage, those are all the updates there. Just for new people here, you can, the information here is pretty obvious. But the thing I want to highlight the most that I try to highlight every video is the yield. So I have two different yield columns. This first one is my yield based off of my cost basis. So as you can see, the biggest example here is for CM. So for CM, my cost basis yield is 9%. That's because I bought the shares at average of $42.97 a share, but the actual yield for the stock is $4.81 if you were to buy it today. So those are the two differences in the yield columns there. So just to clear all that up. Last but not least, and we'll kind of we'll save for the next one. All right, so moving down. So this is my Roth IRA. So again, I have them split up because they're two different accounts, two different places. So I wanted to show that too. So in the Roth IRA, again, we bought that Allstate. I bought some here too because it's a regular company, and the yields was really high. So I wanted to add that high yield to my taxable account and also add that high yield to my Roth account as well for those tax-free gains. So our portfolio total for the month was $43,744. Our cost basis yield is 4.64%. And then our yield, had we had the same amount of money bought in all today, would be 4.45%. So for dividends, this is what we were expected to make a year from last, August. This is what we expect to make a year from this September. And then this is our dividends year to date. And now you may notice, there's this brand new little platform or category here. So my kiddo, as you all saw some of my other videos, I finally opened an account for him. It's a UTMA, or Uniform Gift to Minors Act. So instead of doing the 529 plan, I opted for this one. If you want to see my video on why I chose that, the link's on one of these sides up here. You can check out that video and learn more there. So I went with SCHD. I don't want to have to manage this a lot, and I want to be able to grow it with them. So I don't want to take the stocks I've already got in my portfolio, my wife and I's portfolio, and just complicate his. I want to keep him simple in SCHD, and then as he gets older and I bring him into the plan, he can see how much he's making there, and if he wants to copy my stuff, he can do that. If he wants to keep SCHD, he can do that. Or if he wants to run it a little differently, he's more than welcome to do that too. I'm just here to facilitate, teach, and grow him. If you have not already, like and subscribe to this video, as it helps me see what content you all like and want to see in the future. All right, so now jumping into the income tab. So once again, in this tab, we have all the months, January through December, and then we have the different paychecks I get from each company listed here below. And then we have all the totals on the far right-hand corner, and also on the bottom, totals per month. So on the top with the taxable brokerage, we got Paychecks from O. Again, it's a monthly dividend payer, and that's on a steady gradual incline, as you can see there, which is just fun to watch. Next is PLD. We got $13 there. SCHD, I forgot to mention on the front. I finally started playing with my wife's account. It's on Charles Schwab. It's a whole different platform. I don't want to look at it, so I just put in SCHD because I didn't want to look at it. But I knew I could buy that, reinvest it, and it'll just do its thing. I'll check in every so often just to make sure that all that looks good. But now it's here. It's here, and now you can see all that too. Again, we did get a payment from Truist and then sold them. So take that free dividend and move on, which is great. And then this is interest from my cash account through Fidelity. It doubled because I sold Truist and Amazon. So that essentially doubled my cash holdings, which I won't reinvest yet until we figure out this government shutdown thing, because I might be able to make a ton more capital gains depending on how that works out. Again, video on that in the future. So our total taxable account or brokerage account dividends for the month of September is $42.95. Big note here, Fidelity pulls out taxes for me just proactively. So all of these numbers here in the taxable brokerage are post-tax. All right, next for the Roth IRA, Kroger paid us $11. We got NE, which is NextEra Energy, $12 from them. Robert Half, $15 flat. Tractor Supply, $7.44. And then again, the cash account, $4.35. It doubled because I put more money into it. I didn't sell anything. I just added more money to that account. So that's why. We have a total of $50.28 in dividends and the interest for the month of September. Just to reiterate, all this is tax-free dividends. Because it's in the Roth account, all the dividends we receive in the Roth account are tax-free. It's amazing. It's awesome. So our total there is $93.23, which is like a upper middle month for us. So I'm not complaining. I'm happy. Total dividends for the year, $812.03. Again, if you go back to the front page, I'm expecting to get somewhere just over $1,000 in dividends for this year. So pretty excited. Again, I also have the kid added to the bottom here. He got his $1.15, like I told you, and then 70 cents in interest. So he has made $1.85 year to date. Last but not least, let's jump to the data sheet. So again, I already kind of told you a bit about this. So it takes his account value, that's from the very front page. It takes the yield, that's my yield based off of cost basis, which is from the front page. The dividend monthly is the dividends we receive year to date, and then I have to update this denominator there. I haven't figured out how to automate that, but I'll figure that out in the future. Again, our anticipated annual dividend amount is 1,082, and then the growth I've already explained. So to get that $10,000 that I was talking about, we have to get to year 21. Keeps changing because we make more dividends every year, so that's a cool thing. Year 21, we'll be making approximately $13,000 every single month just on dividends. And this is just reinvesting the dividends. This isn't even adding more money to the equation, to the fire. This is just letting my portfolio go essentially on autopilot, and that's where we'll get. I hope you got something out of today's video. It's hard to believe it, but this is our 6th video or 6th month in this series so far. And I've really enjoyed being able to keep track of my portfolio a little more closely because now I have y'all to show it off to. So it's been a lot of fun. If you're looking for a financial coach to learn more about dividend stocks, the link to my calendar is in the description and in the comment section down below. Schedule an appointment today and we can get you all caught up to speed on what dividends are all about. I love each and every one of you, and I'll see y'all in the next video.